Good evening, everyone. A very warm welcome to the 23rd Indirect Tax Colloquium organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan, who is qualified CA, qualified LLM, LLB, and MBA. He is the chairperson of the National Fiscal Affairs and Taxation Committee of PCC and I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write it in the chat box. We will answer all your queries at the end of the session. Now, I request Samir sir to say a few words. Over to you, Samir sir.
Uh, Thank you, Pratyay. Thank you, Vivek. Warm welcome to all the participants for joining us on this working day. And we have lot to discuss. There are a lot of new development has happened in the last 1 month or so. So there are a lot of topics that Vivek is going to take up in this session. And if you like what I said, if you have any queries, please put it in the chat box, or you can unmute yourself at the end of the session. You can directly ask Vivek about it. And so we start with the session, Vivek. Over to you.
Thank you, Samir. And thank you, Pratyay and Team Tax Connect and VILGST for organizing this webinar. This is our 23rd webinar. So almost we have been holding colloquiums for the last 2 years. Almost every month we hold one colloquium, sometimes two, and sometimes, over a period, some period of time, 1.5, 2 months, we hold one. So, and most of all, thank you to all the participants for joining on this working day. Generally, we hold our webinars and indirect tax colloquiums on Saturday morning. But this time we thought that let's have it on a Friday evening where people would be winding up for the week. I'll share my screen. Pratyay, is the screen available, visible?
Yes, sir.
Yes, sir.
Thank you. So, lots and lots to discuss. All the 16 circulars and more than 49 amendments and recommendations which were made by the GST Council 53rd meeting. Also, there are certain critical issues in customs which we would discuss. Therefore, I would go straight to the point and discuss one by one all the circulars. More important, how should trade and industry and the consultants in the consulting space in indirect taxes prepare and implement these circulars and changes in their companies and industries. I would request if participants can put themselves on mute. Yeah, thank you very much. So, first of all, very, very welcome move. In fact, this 53rd GST Council meeting, almost all the recommendations bearing one or two, they have been trade facilitation measures. So first of all, this GST impact on supplies during the warranty period. This was already clarified that there is no GST on supply of spare parts and goods during the warranty period and supply of services too during the warranty period. White Circular 195, which was issued in July 2023. But now with Circular 216, after the rigorous follow-up and recommendations of trade associations, this circular 216 on GST on warranties has put to rest, and almost this is the nail on the coffin of any disputes of GST under warranty. So, what was the leftover dispute of GST on warranty supplies? Was number one in circular 195, those industries, specifically the automobile industry and the white goods industry, who were impacted tremendously for GST on warranties. They would know very, very well that the circular 195, while all trade associations, including our various associations, I have myself represented at all the levels, we had always represented that the circular should cover that spare parts as well as the whole product supplied during warranty period, that should be outside the purview of GST. No GST should be charged on warranty supplies, whether spare parts or the whole goods, because the cost of this warranty supplies is already included in the cost of the original product. The circular 195 started with this point, but thereafter they kept on talking about spare parts. Now, what happens practically, say for example, you are buying a mobile phone, and within the warranty period, you replace that mobile phone which has a manufacturing defect with another mobile phone. Therefore, there should not be any GST applicability on the supply of the completely new mobile phone during the warranty period also. This was not covered by the circular, and certain field formations, specifically what we have observed in the northern part of India, they were taking a view that, see, this circular covers the spare parts only. This does not include the goods as such. The ministry was very, very clear, GST Council was very, very clear that they want to put to rest any dispute of GST on warranty supplies. Therefore, now they have clarified whether it be spare parts or whether it be the complete goods itself. If we take the same example of mobile phone, it can be changing of the motherboard of the mobile phone or the mobile phone itself. If it is a warranty supply, the cost of this goods would be included in the cost of the original supply. Therefore, there is no question of GST on warranty supplies. Second, again, it is a very procedural issue, but certain field formations we have seen that due to mere procedural issues also, there are demands which are raised, and is not the intention of the GST Council. Therefore, if you go through Circular 195, there were three procedures which were mentioned. One of the procedures said that, again, I will come to my same mobile phone example. If you go with a defective mobile phone to a mobile dealer or a shop, thereafter the mobile dealer, if he finds the defect, he will connect to the manufacturer. Then the manufacturer has to send the mobile phone to the dealer, and then the customer would get the mobile phone under the warranty from the dealer. It is impossible to do this. The customer would not wait for 4 5 hours or even 1 or 2 days if this procedure has to be implemented to get back a new warranty supply. Therefore, now they have clarified that you go with a defective mobile phone. In my example, it is a mere example, but it can be anything. It can be batteries, it can be anything, any white goods. So the customer goes with the goods to the dealer. The dealer finds it is defective and it is covered by the warranty period supply. From his own stock, the dealer will provide the new goods to the customer and thereafter raise a requisition from the manufacturer and get back the goods supplied to the customer free of cost from the manufacturer as per the terms of the warranty. This procedure was also accepted by Circular 216. Another issue was, what about extended warranty? It was clarified in Circular 195 that even extended warranty would be liable to GST. Now, whether the question is, say, for example, you are purchasing a car, right? The GST rate of car is, say, for example, we are just taking a, example. I'm not quoting the exact rate, including compensation cess. So the GST rate of a car is 28%. The extended warranty provided at the time of purchasing the car, whether it is a service or whether it partakes the nature of the goods. They have clarified now that in case this extended warranty is provided by the car manufacturer himself, it would partake the nature of the goods and GST rate of 28% would be chargeable in my example. In case it is provided by a third party, say for example, it is provided by an insurance company, this extended warranty, it would be classified as a service and liable to tax at the rate of the service, say 18%. However, if after you purchase a car, after 1 month or 6 months, that is after the purchase is over, you go to the manufacturer and purchase extended warranty service separately, it would be treated as a pure vanilla service. No question of the rate of the goods being charged on that extended warranty supply post the supply, original supply has already happened. However, in GST, as we all know, it is a transaction tax. You can see at the bottom of this slide, still there is some procedural issue. In fact, today itself, I was visiting to various taxpayers in Bangalore. So one of the taxpayers, he put out a new point over here. So I will just explain this point. You can see it as a form of a question on your computer screen. So the thing is that uh, now what, say for example, I will come to my same example, right, of a mobile phone. Say a OEM, he sells this particular mobile phone in Tamil Nadu. He does not sell any mobile phone in Maharashtra. However, the customer goes to Maharashtra to a dealer and he wants a mobile phone to be replaced by the dealer because it is covered during the warranty period. The dealer in Maharashtra replaces the goods because it is in mobile warranty period. The original supply happened from Tamil Nadu, but the warranty supply happened from Maharashtra. The question is, when the goods would be supplied from Tamil Nadu OEM to the dealer in Maharashtra who has replaced and provided the warranty supply, whether it is to be transferred through a delivery challan or as a stock transfer or by any other means from Tamil Nadu OEM to Maharashtra customer or branch. It is our recommendation in such case where you cannot link the original supply with the warranty supply, in such case where it is an interstate supply and replacement of warranty by a dealer who is outside the state, in such case it is always better to do a stock transfer or a sale to the dealer, and thereafter the dealer provides a warranty supply to the ultimate customer free of cost. So, friends, this is the welcome, very very welcome move. I think after this, the issue of chargeability of GST on warranty supply would be put to rest completely. Another welcome development, but I think it is only 25% of the job done, is Circular 212. I just saw a query on the chat box. Please do keep typing your queries on the chat box. We'll answer all of them. But I was seeing something on the chat box with respect to the Circular 212. So we'll discuss that because it is a very, very important circular. Post-sale discount. I think all of you in some form of the or the other would have an issue with the issuance of credit notes in case of post-sale discount. Since we have a lot to cover, I would concentrate on absolute critical points. which would impact trade and industry, and how to deal with this as well as other post-sale discounts. So under section 15, subsection 3, clause B, subclause 2, 15(3)(b), it is mentioned that in case you provide a post-sale discount which was agreed at the time of the sale, and you can link the credit note provided for post-sale discount with the original sale, in such case you can reverse your output tax liability as a supplier by issuance of a GST credit note. However, you have to ensure that the counterparty, that is the recipient of the credit note, has reversed the corresponding input tax credit. It is impossible performance. That the entire trade and industry has represented that, look, there is no mechanism, there is no machinery for ensuring that the counterparty recipient of the GST credit note has reversed the input tax credit. Therefore, now, as I said, they have done only 25% of the job by issuance of Circular 212. Although it is a welcome move, it would put to rest some litigation in this space. In case supplier-wise, for the period financial year 17-18, 18-19, 19-20, right, in all the past periods, in case the tax impact of the GST credit note for post-sale discount is less than rupees 5 lakh in a year, then you take a declaration from the recipient of the credit note that the ITC correspondingly has been reversed by the recipient of the credit note, that is GST credit note, right? However, if you see on the screen point Roman number 1, clause 3, this is very important. I spoke to one or two of the very, very big OEMs and players who provide post-sale discount. And the moment this circular 212 has come, they have drafted even a sample declaration. Friends, when you are drafting a sample declaration, in fact, we would be drafting a declaration very soon. We will share it with the the members of VILGST and Tax Connect also. You have to be very careful with clause number 1, serial number, Roman number 1, clause 3 on my screen. If you see, amount, the counterparty has to declare the amount of ITC reversal in respect of each credit note. This is fine. Along with the details of the DRC3 or the GSTR 3B return, any other relevant document through which such the ITC reversal has happened. So this is very, very critical. So you have to mention in which GSTR 3B you have reversed the corresponding ITC each credit note wise. So for example, just to clarify, you have got a credit note, you have got 10 credit notes from the particular supplier for post-sale discount. With respect to each of the credit notes, you have to declare in which GSTR 3B or the DRC3 challan number where you have reversed the corresponding ITC. In case the value of all the credit notes, the tax impact of that is more than 5 lakh rupees, you have to take a chartered or cost accountant certificate in this regard. Now, this is the most critical aspect of this circular 212. The counterparty, and mind that they have issued this manual mechanism until unless our online mechanism comes on the GST portal itself. But they have assumed and use the same analogy like circular 183 and 193. However, in that case, it was a declaration by a vendor. In this case, it is a declaration from your dealer or your customer. Is my voice clear, Avik? I see.
Yes, sir,
Is my
you're
voice
audible,
clear?
sir. You're audible, sir.
My voice is not breaking, no? It's audible,
So,
yeah. So participants may see their broadband at their end. Audible. Thank you. So friends, this declaration, this point is very, very clear. He is your customer. Mind that you do not control your customers as much as you control your vendors. Sometimes you can ask your vendors, to give something to you, and they are duty bound to give because of commercial considerations and practical business scenario. But your dealers or your customers, you may find it difficult for them to relate, and your sales department would be involved there, right? We all know as tax professionals and finance professionals how difficult it is to get work done by the sales and marketing department. So this circular declaration, please do not do it in a rush. Please draft your declarations with a lot of you see in detail. Please draft your declarations, undertakings, or certificate format so that tomorrow the department does not reject it. Further, there are various other issues. Say, for example, you have done business with a customer 1 year back. Today, you don't do business with the customer. It might be difficult for you to take a declaration from the customer. Therefore, we have further recommended and proposed before the GST Council through various associations that the very fact that even the counterparty, the dealer or your customer, they are also during their assessment or audit or procedures, they are asked by the department to confirm that they have reversed all the input tax credit with respect to the credit notes which are reflecting in the 2B. Then why this double work? Why supplier has to also get a declaration, and the recipient also has to disclose during scrutiny or assessment or audit? Let it be only at the scrutinized at the dealers or the customers end. And why at all 15.3b2 is needed? When the deal the when the registered dealer or the customer, he is also registered with the GST department. Somewhere he is, whether if he is not reversing the input tax credit, then he will be caught by the department. Therefore, we have recommended to actually scrap this section 15.3b2. Let us hope that in the budget we see some uh, development in terms of making 15.3b2 redundant. So I said only 25% of the job done by this circular. 50% of the jobs is still pending. From the last 1 year, we have represented through various associations, chambers of commerce, federations, regarding commercial credit notes. They have clarified in Circular 212 only with respect to GST credit note. In case of commercial credit note where the there is no agreement at the time of the sale, there is no corresponding output tax reversal by the issuer of the commercial credit note. Even in such cases, after the rescindment of Circular 105 of 2019, certain field formations are asking the recipients of the credit note to reverse the corresponding ITC, even in case of commercial credit note. Friend, it is very, very clear there is no ITC reversal requirement in case of receipt of the commercial credit notes. Second and most important, DGGI, what we have seen in various cases, DGGI is making a case on the dealers or the customers who are the recipients of the commercial credit note, alleging that the dealers who are recipients of the commercial credit note, they are actually providing certain service to the OEMs, that is the issuers of the commercial credit note, and therefore a service invoice should be issued. This is a major issue. There are thousands of cases specifically invoked by DGGI anti-evasion of the central government. Few in the state government, certain states like Maharashtra have also done this. This needs to be clarified. What do we need to do? Tell me very clearly whether my dealer or customer has to issue a service invoice. or whether I have to issue a commercial credit note. Because you see, I have represented this before various commissioners of various big states. They have asked, how can it be misutilized? I have said, sir, it is a revenue neutral transaction. It cannot be misutilized. However, in case it is a pure discount. Now I was interacting in with one of the taxpayer. He said, sir, notice aa gaya dealer ko. One of my dealers or few of my dealers have got a notice. Now I have asked them, even for post sale discount while commercial credit note, I have asked them to issue service invoices. Please do not do this. Friends, I am repeating, in case of commercial credit note, just because your dealer has got a notice from the GST department, please do not artificially fabricate a discount simpliciter into a service from the counterparty, because then they will allege a fake service invoice from the dealer or the customer to the OEM. This is very, very critical. Please do not do this. However, in case there is a service, you have to make it service. Otherwise, please mention post sale discount in case of commercial credit note. The issue, if you can go through the case, the appellate advance ruling judgment in the case of MEK peripherals by the honorable, Mumbai authority, GST authorities. In there they have said, just because the word in the postal discount incentive is used, and that is why it is considered as a service from the counterparty, it is not considered to be as a discount simpliciter. Therefore, you have to structure your agreement in such a way, rather than artificially fabricating a discount simpliciter into a service from the counterparty. That is very, very dangerous. Even then, if the department wants to fabricate a pure discount simpliciter into a service from the counterparty, you can take shelter by the judgment of the Honorable Madras Court in the case of Supreme Paradise, which was very recently again followed by the Honorable Madras High Court. We can share the citation with you. It is not available with me at this point of time. The Madras High Court has again reiterated its judgment in the case of Supreme Paradise in case of commercial credit note issued for post-sale discount, right? So circular 212, this is a very, very important circular. Still some work to happen. There are various others. You see, very recently we have represented before the Ministry of Finance, CBIC, and the various state governments of GST, customs, and of course, income tax matters is out of this purview of this webinar, so we'll not discuss. There are certain other critical issues on GST which we are representing. For example, transfer of input tax credit from one state to another state, right? Just like transfer of cash balance from one state to another state. This is a long pending due. It is already in discussion in GST Council. You would see you see those of you who are affected by the fact that in one state you are paying the tax in cash and in other state you have accumulated ITC. You would understand that while the issuance of circular 199 in July 2023 and the issuance of circular 210,211 now, I would come to 210,211 going forward. They are very, very clear. Friends, it is now, the GST is going in a way that this artificial bifurcation of the same company into 25 distinct persons, this is causing a great hardship for the taxpayers, and interstate movement of ITC and cash balance has to go. So cash balance while PMT 09 has already come. We are representing rigorously for transfer of input tax credit also from one state to another. Again, under customs JNPT port in Mumbai, you see, this is one of the critical issue where already release has come from the customs commissioner in the Navaseva port, I suppose. This is with respect to third country, you see, imports. So in case your OEM is in Indonesia, and the other party is in say China, Sri Lanka. So it is a bill to ship to. Bill you get the material as billed from Sri Lanka, but it is shipped from Indonesia. OEM and all are related party. In case they are asking, in this case they are asking the cost of manufacture, which is not required anywhere in the customs law, and therefore, this clarification also we have represented rigorously. Possibly in this budget or through a circular, it will be clarified. Now we will come one by one on the other very, very important circulars. We have covered two circular, 216 and 212. There are other 14 circulars which we'll cover one by one. First of all is the monetary threshold for the appeals, right? So GST department will not file the appeal before the GST appellate tribunal when it is formed if the tax impact is less than 20 lakh rupees before the High Court, if it is less than 1 crore, and Supreme Court if it is less than 2 crores. However, two critical, you can go through this PPT, there are various permutations, combinations. This is the mere tax impact which I'm talking about. If it is only interest, then this monetary limits in our view would not prevail. But there are two critical issues in this circular 207. You see, number one, they are saying in case various assessment years have been clubbed in one order. So you get one order for 2019, 20, 2021 and 21, 22. And it is on the same issue for each year, there is a tax impact of 10 lakh rupees. Just because you have got the one order, or if the appellate authority also clubs three orders of three separate assessment years into one, then the accumulated amount will be taken into consideration. This, in our view, is not going with the spirit of the national litigation policy. Maybe a further addendum to this circular would be required. Actually, this circular, would be very, very difficult to practically get it implemented by the field formation. Because of these exclusions, if you can see on the screen, any valuation dispute, classification dispute, refund dispute, place of supply dispute, in addition to that, any other dispute which is recurring in nature, involving interpretation, or even if any dispute is recurring in nature also, that is outside the purview of this circular. Therefore, any dispute, if it occurs for 3 or 4 taxpayers, all the field formations will take shelter under this and file an appeal. Therefore, again, this circular needs to be revisited for proper implementation. And this is not yet replicated as far as I know by the state government. Therefore, CPIC officers will follow this. But state government officers in various states, until and unless it is replicated by the state governments, I feel maybe the state government officers may not follow this. GST Appellate Tribunal. Now, friends, various trade facilitation measures are there. However, overall, I would tell you the scenario nationally on GST Appellate Tribunals. Honorable President Shri Mishra has already been appointed even before the elections, as you are all are aware. And now in each of the states, they are, firming up the place. I think in the GST Appellate Tribunal to form, the requirement of the space is 35,000 square foot. It will be a very, very large space which would be required, and that is why firming upon the space where the GST Appellate Tribunal would be formed would require some time. All the states have started. I think Odisha space has already been finalized as far as I know from the various, the circles. And going forward, the places would be finalized. Thereafter, the machinery would be implemented, registrar would be appointed. Then we understand that the GST Appellate Tribunal will be totally IT driven. That is, the GST Appellate Tribunal filing will be totally online, and even the hearing is expected to be online. As of now, we feel that initially they will make it hybrid. That is a combination of physical hearing as well as online hearing. two important relief measures. First of all uncertainty is over now. They will notify the date when the principal bench in Delhi would be, operational, and they will notify the date by the notification when each of the states would be operational as far as GST 80 is concerned. And your time barring period for filing of appeals before the GST 80 would start from the date of such notification. Therefore, keep track of the date. Maybe various states, various notifications will come out, because we feel that it is all the states, they might, the tribunals will might become operational at different dates. Maybe Odisha can come after 2 months, Maharashtra can come after 2 months, 10 days or so. Because at one time to make 31 tribunal benches operational would take some doing, and it would be a task. And already there is a huge pressure of the GST Council to operationalize the GST 18. So keep track of the date. However, it is our firm recommendation, friends, that please keep your appeals ready for the GST 18. Already there is an amnesty scheme where many of your disputes may be resolved under Section 73. We would come to that. But whatever you feel that has to go up to the GST 80, keep your appeals drafted, ready, grounds and facts. Already the form EPL is there, which you need to file before the GST 80. So keep your appeals ready. Pre-deposit, you keep your finance teams involved. Additional pre-deposit in case of GST 80 has been reduced from 20% to 10% of the tax amount, right? Possibly, if it is an tax interest penalty, only 10% would be required of the tax amount. However, many high courts have already given a verdict. I think almost all states are following this. Where recovery action, is the voice clear? Ravi?
Yes, sir. Yes, sir. Yes, sir.
Yes.
Voice is clear.
So the GST Appellate Tribunal, yes, thanks. So it's audible. So GST Appellate Tribunal, many of the cases you have filed already. I think all of you taxpayers have filed some appeal or the other, even if you are in the industry space or consulting space. If not any other thing, you must have appealed for the waybill matters. I am sure each one of the taxpayer would have one or two waybill matters at least, right? So, uh, you see, there already some states have started recovery action, and you have paid 20% pre-deposit in as under for achieving the stay. All the high courts have ruled in this regard. Now that 10% differential would be refunded to you. It is right time after this is amended, you can file for the refund of the 10% differential pre-deposit, right? However, in many of the states, because recovery was going on, the value was less, even on the interest and penalty amount they have taken pre-deposit. In such cases, you would get the refund of the complete amount of the pre-deposit once this is notified. So GST tribunals, I think this is important. Again, there are various intricacies of the GST tribunal as to whether you can file. So as of now, what the law stands under Section 112, it seems as if the principal bench can hear place of supply issues and any other issue. So in case you have, but the state benches cannot issue hear place of supply issue. But this should not be the intention of the government. The intention seems very clear that in case any order has a place of supply issue, then that order is applicable only before the national, principal bench in Delhi. All other cases could go to the state government. Very, very important, friends, is pre-deposit, and most important is this time barring period. We have already seen at the first stage appeal stage that the commissioner appeals, that is the first stage appeal, is not able to condone more than 1 month of delay under Section 107. The GST Appellate Tribunal, as the law stands, Section 112, cannot condone more than 3 months of delay. right? So it is very, very important that you file your appeals in time. Otherwise, this matter may have to be taken up either with the High Court, and that would not be the right scenario. Section Circular 209 with respect of place of supply in case of bill to ship to, where the bill to party is a unregistered party. I will take this very, very shortly. You see, you have to understand the principle in GST. The principle we all know from the last 7 years is very clear. The consuming state has to get the revenue out of GST collection, right? So now in case there is a bill to ship to transaction, your bill to party is a unregistered party, but your ship to party is registered or unregistered, right? So you are in Gujarat, your customer is located in Delhi, and your customer's customer, your customer where he wants a delivery in Haryana, right? You are located in Gujarat, unregistered customer in Delhi, shipping address in Haryana. Question is, where would be the place of supply? Under section 10 subsection 1 clause CA, right? 10(1) CA, it is stated that the address of the recipient, in case the bill to party is the unregistered party, the address of the recipient, in my example, Haryana, would be the place of supply, right? Because finally the goods are consumed in Haryana, place of supply has to be the ship to state, right? That is the pure funda of this circular 209. You can go through at your own pace. You would ask me a question that, sir, then why in bill to ship to we always do bill to party in case of registered dealer? Because in case the bill to party is a registered party, then he has to have a back-to-back invoice under 10(1)(a) to the ship to party. So had your customer in my example been a registered dealer, you would have done bill to Delhi, ship to uh, Haryana, place of supply Haryana. And then your Delhi customer would have done bill to ship to Haryana, money would have flown to Haryana. But because in the instant case your Delhi customer is unregistered, he cannot make a bill, a counter bill. Therefore, it has to be the place of supply has to be Haryana. Circular 210. In fact, just today itself, I was discussing whether Circular 210 puts to rest Northern Operating System case. I would discuss this circular with two examples, right? First is Northern Operating System case. What was Northern Operating System case in service tax regime? The Supreme Court has held that in case a uh, expatriate in case of foreign companies. Your holding company is, say, in Italy. You are a subsidiary in India. An expat from Italy comes to India and you reimburse the money of the expat salary to your holding company in Italy. The Supreme Court has held, again, there are various, you all would be aware. You can go through my video on my YouTube channel. I have discussed this Northern Operating System case when it came, long back. You can go through VILGST website. We also have an article on this. So the service tax case, the Supreme Court in Northern Operating System case had said that, see, this is a supply of service from the foreign holding company to the Indian subsidiary company liable to reverse charge, right? It was assumed that it was considered that the same analogy would apply in GST. However, under GST, there is a Rule 28, Sub-Rule 1, second provision. Rule 28(1) says that in case of related party, holding subsidiary is a related party. Rule 28(1) states that in case of holding subsidiary and any other related party transaction, the value of the invoice would be considered to be the open market value. The question is, in case of import of service, what is the invoice? Whether it is the invoice of the holding company or a debit note of the holding company, which is the invoice, or the RCM invoice issued under section 31(3)(f) of the CGST Act, which is the invoice. It has been clarified by Circular 211. We will discuss that after this Circular 210. It has been clarified by Circular 211 that in case of RCM, the where the counterparty is unregistered, in our case, holding company is unregistered in GST. In such a case, the invoice issued under section 31(3)(f), that is the self invoice, which we call it in our colloquial language in GST. That is the invoice on which ITC can be taken. So in such case, whatever value you declare in the invoice in case of related party transaction, that would be considered to be the value. Even though invoice or debit note from the foreign supplier in our case would be different. Therefore, I would say those taxpayers who have not devolved any payment in Northern Operating System case, they can take the benefit of this circular 210 for import of services from related party in Northern Operating System case. However, if you have already got a summon or any other notice, and if you have made an RCM invoice already, that is a self invoice, then there is no chance. Then the circular says 211, we will come to 211, that in case, say in Northern Operating System case, you got a notice, you made a self invoice, taken the credit. To the extent of the credit, this circular 210, that comes to your rescue. But for place of supply, under section 13, interest would be applicable as per this circular. However, in our legal submission, it is a revenue neutral transaction, and as decided by the Honorable Supreme Court in the case of Jet Airways, it would be a revenue neutral transaction and interest should not be applicable, at least in this case. So I think I've explained this with an example. I would give another example to you. Say, for example, you are using the brand of your foreign company, or your foreign holding company has got a SAP access, which you are also using. No debit note, nothing is raised by the foreign holding company on you, right? In this case, you are not issuing any invoice under 31(3)(f). That is also accepted as per Circular 199. In case even no invoice is issued, the transaction value would be considered to be nil. That same analogy they have applied in Circular 210 for import of services from a related party, right? So this is very, very clear now, and I think this would resolve all of these kind of issues of import of services from related parties and the valuation and the tax invoice therein. Again, there is another issue in case of providing of loan by a overseas affiliate to its Indian affiliate, or by a person to a related person, right? So in case you are taking, so in my same example, let us consider, in case you have taken a loan from your Italian holding company and you are paying interest also, or you have a holding company in India, you are paying them interest, right? In it, whether the question is whether it is a supply of service, this provision of the loan, answer is yes. I am repeating, provision of loan from a related party to another related party with interest as compensation is a service, right? The question is, what kind of service it is? It is clarified by circular by notification 12 of 2017 CGST rate, item number, entry number 27. But it is an exempt service, right? Provision of loan by one person to another where the consideration is interest, that is exempt, right? So this transaction, as far as where interest is the only consideration, is exempt. Now, certain field officers, and as we say that the imagination of field officers can sometimes defy, logic, because even in imagination they create a deeming fiction, whereas the law is that a deeming fiction has to be created only by the law and not by imagination. So some of the field formations, they were saying, see, if you go to a bank, if your company, in my example, if the Indian company has gone to a bank or an FZF, NBFC, they would have taken certain processing fee from you or an administrative expense. Now your related party has not taken that processing fee, but they are processing the loan. Therefore, it is a supply of a service without any consideration. Friends, this circular has amply clarified that even in this case, Schedule 1 would not be applicable. In such case, in case of related party, there is no processing itself because holding subsidiary know each other. There is no risk at all when a holding company gives a loan to a subsidiary or vice versa. Therefore, if there is no processing charges, it cannot be deemed that there is a processing or an administrative service which is performed. So now this position is very, very clear. However, if you take a processing or an administrative fee for provision of loan from a related party to another related party, in that case, to the extent of the processing or the administrative charges or whatever you call it, you have to charge GST at the rate of 18% or as may be applicable based on the classification of the service. Now, ITC on ducts and manholes for optical fiber cables. This circular, although it is very specific, I will not go into the detail or technicalities of this circular. However, I will draw an analogy for the business. Yesterday, if you have gone through the VILGST mails, right? I think Samir is here. He would confirm. Samir has also sent a WhatsApp today in the morning, right? There is a case which is decided by the Bombay High Court, the case of Concon LNG Limited. So I would discuss the overall impact of this circular, right? Circular 219, right, on all the industries. So the circular states that in case there is a 4G, 5G cable network operating optical fiber network, which is, placed, right, by a company, they have ducts and manholes, right, which is used for the purpose of laying that cable. In this circular, they have said that these ducts and manholes ITC will not be blocked as a works contract service or under construction service under section 17, subsection 5, clause C or clause D. Why? Because they are considering, now mind that if you read this circular very carefully, they have used a word. Just go on Will GST and search the word appears in this circular 219. They have not given any logic. They have just said this duct and manholes appears to be plant and machinery. They have not given why it appears to be plant and machinery. They have said this duct and manholes is required for laying optical cable fibers and it appears to be plant and machinery. Why? Because it is because of this optical fiber that our output service is provided by the optical fiber company, right? Therefore, this ITC is available on these ducts and manholes because plant and machinery has been excluded from the purview of 17.5 C and D. Friends, I would, only draw your attention to the analogy which they have used for the purpose of defining plant and machinery in this circular 219, which you can use in your own businesses, right? The question many a times which will come to you whether a particular equipment is a plant and machinery or not. Because if it is plant and machinery, even if it is immovable, ITC will be available. Even if it is capitalized, otherwise ITC will not be available. Even in this case, which has been held on 28th of June 2024, which has been reported by VILGST in the case of Concon LNG Limited, they have given, the Honorable Bombay High Court has provided two you see criteria on the basis of which to decide whether a particular equipment is a plant and machinery or not. In this circular, they have applied only one criteria, right? So this circular gives a very, very important precedent. The Honorable Bombay High Court, in the case of Concon LNG Limited, has held that for a particular equipment to be graded as a plant and machinery, one important criteria is that it should help in the provision of output supply of goods or service. In this case, Circular 219, they have used that particular criteria. However, the Honorable Bombay High Court has also said that plant and machinery should be used for manufacturing. There has to be a semblance of manufacturing for a particular equipment to be graded as plant and machinery. Possibly in this case, the case was such. However, today, while Circular 219 read with this Concon LNG Limited, one thing is very clear: any equipment which is used for the purpose of provision of goods or service, that you can use the analogy of this circular and this case law, and you can understand whether it is plant and machinery or not. Why it is so important? Because in case it is plant and machinery, even if it is an immovable supply, then also ITC is available, even if it is capitalized. All 16 subsection 4 cases are resolved. So you can go through our video on our Tax Connect YouTube channel. I have discussed this 16.4 in great detail, right? I would just go through the salient features here. For 2017, 18, 18, 19, 19, 20 and 2021. I am repeating 2017, 18, 18, 19, 19, 20, 2021. The time barring period for taking input tax credit is 30th of November 2021, right? So if you have taken any ITC during by 30th of November 2021 in your returns, for this period, the ITC would not be considered to be as time barred. However, in this case, the supplier's GST number was suspended or cancelled. Within 1 month, if you have taken the ITC, then it would not be considered to be time barred, right? 1 month from the date of revocation. This is what the recommendation of the GST Council is. 5 important facts and issues and points to remember over here. When I discuss, if you go to my YouTube channel, I have discussed the GST Amenesty scheme, right? Under section 120(8) capital A, which would be notified in this budget. Friends, 16.4 would be amended to this effect. This amendment, of course, would be tabled in this budget in the finance bill. It would be enacted by Finance Act, and thereafter it has to be approved by 50% of the state legislatures. By October or November, you would see the notification, right? However, please note, this is an amendment to the section itself. It is a retrospective amendment. Therefore, if this amendment is in such a form, pure vanilla form, as per recommendation, we have to see how this amendment is done. If it is retrospectively amended, then if you have paid or reversed the ITC for cases of 16.4, you may go for refund, right? We have to see how the amendment comes. So this is very, very important. Many taxpayers have asked the same thing about the GST amnesty scheme. What happens if I paid a section 73 demand or interest or penalty? Or if I have paid before this GST council meeting, will I get a refund? My answer is no. There it is an amnesty scheme. Here it is a amendment to the section itself. So this is very, very important. You have to see whether you can claim an interest after this amendment or recommendation is notified. However, There are many field officers who are raising demand for input tax credit, which is time barred for import of services. In case of import of services, bill of entry is the duty taking document. There is no time barring period for taking input tax credit for import of goods. For goods, import of goods. So in such cases, if you have such a case, you have to litigate. I don't think there is any merit in such a case which is raised by the department. It is a pure case. Bill of entry input tax credit for import of goods has no time barring period. Similarly, for debit notes, pre-amendment, the time barring period for debit note was also the time barring period for the original invoice. Such cases would also be covered by the amendment. So this is it about 16.4. Again, in case of RCM, I have already explained by circular 210 and 211. They have clarified in case of RCM, the duty taking document is the self invoice. In such case, the time barring period starts from the date in which the self invoice has been made. However, again, in case of RCM cases, 16.4, if you raise a self invoice, interest would be demanded, penalty could be demanded, but in our view, as per the Supreme Court judgment, interest would not be applicable because it is a revenue neutral transaction. Circular 213 for clarification of taxability of ESOPs, etc., which are provided by the foreign holding company to the employees of the subsidiary company. I think this is very, very simple and unduly litigated. The issue was that in case a subsidiary company, I will use the same example. I have a holding company in Italy. I am an Indian company, subsidiary company of the Italy holding company. My employee reached certain milestone and they are issued the share of the holding company in Italy, right? So in such cases, this is a pure, supply of securities outside the purview of GST, and it is supplied because of a provision of a services of an employee to the employer, which is the Indian subsidiary company. Therefore, it is out of purview of GST. Even the service is out of the purview of GST as per Schedule 3 of the CGST Act. So all the cases, I think in Karnataka, there were some cases on this provision of ESOPs. I think after 213, these would be resolved. GST amnesty scheme under section 128 capital A. Here again, you can go through my video on the YouTube channel, Tax Connect's YouTube channel, where I have explained in detail. And I would explain only that the critical issues in this scheme, because it is yet to be notified. And as I have said, that the scheme would be notified not earlier than October or November, right? Therefore, in case you have a section 73 demand for 17, 18, 18, 19, 19, 20, right? Where it might be in the adjudication stages for 17, 18, 18, 19, it might be in the appeal stages in case of 1920. In such cases, if you pay off the interest and penalty, then tax would be waived off. It's just the reverse. If you pay off the interest and penalty would be waived off. The tax need to be paid by 31st of March 2025. First of all, many taxpayers have asked us, sir, in case I pay off whatever I have, I pay off in DRC3 now, and I will appropriate that DRC3 when the scheme comes. Never do that, friends. If you want to avail the benefits of this scheme, then if you have a demand or an appeal, even if you are admitting, do not pay anything now, because we have burnt our hands with the previous amnesty scheme. If you have paid anything prior to the filing of the amnesty scheme, it would be very difficult to appropriate. Okay. if you have paid the tax under protest earlier, in our view, that can be appropriated. That should be allowed to be appropriated. Otherwise, the scheme would become inoperational by and large. The bigger issue over here is, what in case you get an order show cause where you have 5 issues. Out of that, you want to admit 4, contest 1. Would you be able to go in this scheme? In our view, if this is not allowed, that is issue-wise amnesty scheme, this scheme may not do well at all. Most of the cases would be such where you would be admitting some and would be coming clean, but you would not be admitting maybe all the demands or all the issues which is there in the show cause or the order. Even if you are at the appellate stage, as I've said, you can avail of this scheme, but let us wait for the fine prints to come. Refund cases would not come under this scheme. Section 74 cases would not come under this scheme. Again, a very, very important recommendation by the GST Council, which would be notified very soon. In case you have a balance in your cash ledger, but you have forgotten to file the 3B or you have delayed in filing the 3B, then there is no loss to the government because the cash ledger balance is being utilized by the government. In case of Eicher Motor, the Honorable Madras High Court has held that this money in the cash ledger is utilized by the government. There is no loss and therefore there is no question of interest. 88B rule would be amended to this effect. However, as I said, there are always issues. But in case you have disclosed the transaction in a later 3B. I will give you an example. Say you have filed your GSTR1 with an output tax liability with respect to one transaction in June 2024. However, you pay that liability via the GSTR 3B of December. But you have this cash ledger balance consistently more than the said impugned amount. As the recommendation stands, these cases may not be covered. The cases which are covered is mere late filing of GSTR 3B. In case the amendment comes only restricted to this effect, then these would be litigated in our legal submission. Such cases would also fall within the purview of the Honorable Madras High Court decision in Eicher Motor case. And even if the revenue wants to litigate this, we feel that this would be an appropriate case where shelter under Eicher Motor case of Madras High Court can be taken. A very, very important section 11 capital A is being notified very soon, right? I mean, again, it would be notified not before October, November 2024, wherein in case entire industry has taken a stand which is contrary to the GST Council's recommendation. I would give you an example to make you understand better. In case those of you who are in the real estate space, you would understand this. In many states, at least I know, Tamil Nadu, Hyderabad, that is Telangana, Andhra Pradesh, Karnataka. Here there is an issue where there is certain environmental duty, environmental cess, which is charged by the local authorities for the construction. Now, no builder, developer, they have charged GST on such environmental cess. However, if you see section 15, then it would become clear that such environmental cess may form a part of the valuation. However, the entire industry has skipped this or taken a stand not to include environmental cess in the GST valuation. These kind of cases, in my legal view, would be fit cases for 11 capital A. The government of India is very, very clear, right? And the entire Ministry of Finance, during all pre-budget consultations, they have stressed on the fact, give us suggestions, give us recommendations for increasing the employment. We want to increase the employment in the country. There cannot be any employment more than real estate. Therefore, this issue, in my legal submission and respectful opinion, would be a fit case for 11 capital A. I have just explained this by means of an example for better understanding. It is not that, this recommendation has been made as of now, but, there are many such cases otherwise also. For example, those of you who are in the food processing job work space, you would be knowing. So, for example, you have a principal who provides you grain, you grind it and do job work and provide the grinded grain, atta, to the principal, right? But the bran is also left with you. So the value of the bran would be included in the value of the job work. Many of the job workers, I think the entire industry has not done this. Therefore, in case this 11A has to be used, there is another issue where, in case your principal is a government, many of the job workers have not built in GST. This was a huge case in West Bengal, where the entire industry, in fact, government of West Bengal had asked the job workers not to charge GST, claiming exemption under the notification 12 2017 CGST rate, entry number 3 capital A. In such cases where the entire industry has taken a stand accordingly claiming the exemption, in such cases, I would say that 11 capital A would be the right tool. Clear all the past cases on an as is basis and thereafter all the job workers to follow suit. In case you are an exporter and after exporting shipping bill filed, money received, there is an escalation clause, you raise a debit note, there was no mechanism for refund. The GST Council has recommended that the GST network would be accordingly amended so that even in case a debit note is raised, post the export is complete, refund would be available on the value of the debit note accordingly. Valuation of corporate guarantees. Now, this is a big relief. Let us see how the Rule 28 Rule 2 is amended. We all know that in case Rule 28 sub Rule 2 has provided that value of the corporate guarantees would be deemed to be 1%. And always corporate guarantee is for related parties. Now the GST Council has recommended that 28.2 would be amended to the effect that the value of corporate guarantees would be the invoice value, right? Let us see how this Rule 28.2 is amended, because 1% of the value of the corporate guarantee, that was a big hardship, because sometimes the bank used to take a corporate guarantee of 400 crores, wherein the amount which was utilized was not even 50-60 crores. So giving valuing the corporate guarantee at 1% of 400 crores, that is 4 crores, where the actual utilization was not even 30-40 crores. It was a big hardship. And now I think Rule 28C would be amended to this effect. Now, there was another, I was giving a lecture in one of the forums, and there was a question whether ITC can be taken or not. In my respectful legal submission, there is no bar of taking ITC in case of, corporate guarantees, even if 28.2 prevails. I mind that this would be retrospective amendment. Therefore, those of you who have not charged any GST on value as per Rule 28.2 for corporate guarantees, I don't think there would be any requirement further. TCS on supply-wide e-commerce operators has been reduced from 1% to 0.5%. E-commerce operators who are only liable to TCS would be liable for supply to unregistered party under 122(1)(b). So these you can go through at your own rate. There are various GST rate amendments. The notifications are not yet out. Out of this, you can go through at your own pace, but I would like to take up one of the recommendations. The third one, which you can see on your screen, it would impact trade and industry. I think this would impact entire trade, which is into supply of goods, right? All of you would be using cartons, right? So corrugated and non-corrugated cartons, the rate would be flat now 12% reduced from 18%. This would be implemented from the date on which the notification is out. It should be out very soon. So those of you who are into the supply of cartons, for them, once the notification is out, you have to charge a lower GST rate. However, for all those who are the recipients of cartons, anti-profiteering sunset clause is 31st of March 2025. Please ask all your suppliers who would be charged lesser GST, suppliers, manufacturers of cartons, to provide a passback of the benefit of GST to the extent of 6%, right? This is a big saving on the supply of cartons. The value of the supply of cartons, the value, the rate of cartons should be reduced by at least 5 to 6% once this notification is out. So entire trade and industry start negotiating with your suppliers of cartons, corrugated or non-corrugated. GST on railway services would be exempt for certain services, but again, proportionate ITC reversal would be required by the railways. So railways, you need to restructure your input tax credit once this notification is out. GST on hostel services, right? Now, up till the hostel, the supply of hostel services, if it is the stay for a continuous period of 90 days, I am sitting in Bangalore now, and Bangalore is the hub where entire people from entire country come stay in hostels. So all of you would be rejoicing. The people who are staying in hostels, who are from out of the city, that now there would be no GST on hostel charges if the charges is less than 20,000 per month, and if the stay in the hostel is for a continuous period of 90 days or more. So, right time to you see rejoice, and it is retrospective. So all the hostel owners who were facing a litigation in this issue, all the litigations would be put to rest once the notification is issued. GSTR 1A, I am sure you all have seen a lot on the media on this GSTR 1A. Again, once the notification is out, we would be much more clear. However, personally, I don't feel there would be a lot to rejoice out of this GSTR 1A. It provides that in case I have filed my GSTR 1 erroneously on, say, 11th of the next month, I can rectify my GSTR 1 through GSTR 1A before I file my 3B by 20th of the next month, which is the 3B due date, right? However, mind that the GSTR 1 figures are frozen on 13th night, more or less. Therefore, if you do not amend your GSTR 1 by 1A on 12th or 13th, then your input tax credit available with your counterparty would be as per GSTR 1 and not as per GSTR 1A, right? And they would be able to take the input tax credit accordingly, right? Only in the next month if there is a incremental value which is mentioned. Pre-deposit white GSTR 3, DRC 3, there were thousands of appeal. I think this was just a procedural issue with the GST network. If you have paid your pre-deposit amount for your appeals, why DRC 3, not through the utility of the APL 01, Even now, all these cases would be resolved and the DSCR 3 would be appropriated through the payment through the appeal. Circular 213, there are various circulars on the in the insurance space. The value as per 32.4 would not be considered as a exempt supply. It would be considered as a no supply. Now, same analogy if you apply for pure agent. Many of the some field officers, in case of pure agent, say for example, you are a freight and forwarder, you are taking a reimbursement as a pure agent. Many field officers are taking a view that the reimbursement is a exempt supply. As per this circular 214, you can draw an analogy that pure agent rule 33, that is not a exempt supply, it is a no supply, no ITC reversal is required in this case. Salvage value, wreck value in case of taxability of damage caused to motor vehicles, it would be applicable only in case the damaged motor vehicle is transferred. These are very, very specific industry issues that therefore I'm not going much into detail. You can go through this at your own pace. Input tax credit on motor vehicles by insurance company. So what happens in case your motor vehicle is damaged, you take it for repair to a garage, and in case you pay to the garage owner raises the invoice on the insurance company gets the input tax credit and reimburses the value to you. Input tax credit in such case would be required. However, if the garage owner makes the bill on you as a consumer, then insurance company would not get the input tax credit. In case of cashless insurance, there is no problem at all. The insurance company can take the input tax credit of such inward supplies. Pan masala, tobacco, and similar items, you all know that by notification 4 2024, there were few forms SRM 1, 2, 3, where the machinery as well as the input output of the pan masala production, the electricity consumption, they were required to be disclosed for pan masala, tobacco, and similar items. Now there were certain issues in these technical issues, they have clarified. Basically, I personally do not feel that there is much, there would be much issue in this implementation of this circular, because finally, if you register your machine, then in SRM1 you would get a machine number by SRM1, right? So, and a lot of the procedural issues can be taken care by a chartered engineer certificate. Services provided by the banks to the portfolio investors, that would not, place of supply would be under 13.2 and not 13.8a. Therefore, place of supply would be outside India. That is the location of the foreign portfolio investor for custodian services. So if the foreign portfolio investors gives a bank custody of its security, then place of supply of this service would be the place in the foreign country, and it would be treated as export of service under Section 13, subsection 2 of the IGST Act. In case of HAM model, hybrid annuity mode model for concessionaries, the you see the time of supply would be the receipt of the payment. Similarly, for spectrum allocations charges, the reverse charge purpose, time of supply would be under section 31.5. Again, very, very specific sectoral issues. I'm not going much. Very important again is that section 73 and 74 are being clubbed now under 74A. Many times we are seeing that field officers, because they forget to issue the notice under the time barring period under 73, they issue under 74. Now 74A would have a common time barring period. So friends, I think thank you very much. I think I have covered almost everything of the GST Council meeting recommendations, as well as all the circulars which have been issued. Very quickly, since we have some time left, I will go on to all the questions and I will answer them. I think Mr. Piyush Kya's screen is visible over here. Uh, Avik, can you remove this screen share? Yeah, thank you. Okay, so you see, first question, Circular 212 provides mechanism for evidence to be furnished for reversal of credit by recipients against GST credit note. Issued is not appears to be trade facilitation measure. It will only increase the workload, cost and exposure. As GST matching system to 3B already in place, it can be assured through such matching until alternate mechanism is put in place. Yes, Mr. Ramanujam, I am of the same opinion. However, at least certain disputes would be settled by this the manual mechanism, and that is why I said 25% of the job is done. Whether Circular 212 applies retrospectively, absolutely, it does apply retrospectively. It is a circular, it is a clarification. Mr. Saurav says we have paid the differential amount between 1 and 3B through DRC 3 before receiving the scrutiny notice. Shall we be able to claim interest waiver under 128A? Amnesty scheme, they want some money to be paid now, right? So still, let us hold on, let us see how the amnesty scheme comes. In case you have not paid till now, my suggestion is please do not pay until amnesty scheme comes if you want to go under 128A. Recently, Mr. Satish says, recently Madras High Court has set aside the order of the tax authority in case of Shivam Steel. Mr. Dhawan, what order are you talking? I mean, if you can please clarify further. Mr. Sarkar says whether the recipient of commercial credit note is required to reverse ITC. Absolutely no, not required, as I have clarified. We will share the PPT. Mr. Sarkar says in case of bill to party is a foreign party, whether place of supply would be the ship to party address. Yes, foreign party is unregistered. So same analogy would apply as per section 10(1) CA. However, also look at you see section 11 of the IGST Act. Mr. Nitesh says if place of supply is in India but importer is not having the invoice, in that case we need to pay GST under reverse. If place of supply is in India but importer does not have that invoice, in case we need to pay GST under reverse charge mechanism. Mr. Nitesh, if you can clarify if it is from a related party, again, circular 210, you need to go through. If it is non-related party, if it is a service, then I don't think it would be required, reverse charge. Mr. Mishra says in case bill to party is outside India but ship to party is in India, I said I have answered this, place of supply should be ship to party. Mr. Rishabh Kumar says if we have not taken ITC, will government allow to take it? I think if you are referring to RCM ITC, I think yes, if it is not time barred from the date of the self invoice. Mr. Tarun says, sir, for 16/4/17 to 21, can we avail credit till 30th November 21? Sir, we can avail. Sir, can we claim refund of interest? As I said, it would be an amendment to the section as per the spirit of the recommendation. In our view, until the fine prints come, this interest would be refundable. However, let the fine prints come. Mr. Ashwin says interest and penalty will be refunded. As I said, let the fine prints come. But if section 16(4) is amended according to the recommendation, then it should be refundable. In RCM cases, whether interest will be payable due to delay in the invoice appearing in 2A versus actual payment. As I've said, if there is a time of supply in RCM, in my view, it is a revenue neutral exercise and interest should not apply. However, it would be litigated by the field formations and would be settled going forward under litigation, in my view. Can department ask RCM to a reconciliation for delayed payment in future? Reconciliation, of course, it can ask. However, interest, I have replied. Is RCM applicable on foreign bank charges? Very good question, Mr. Kumar. You have to see for foreign bank charges what is place of supply. I never answer place of supply issues for service online because for place of supply in case of foreign bank, you must look at section 13, section 13. As per section 13.8a, if it is falls under 13.8a, then RCM would apply because place of supply is in India. But again, I am saying you need to be very careful of services. If it falls under 13.8a, then RCM is applicable for foreign bank charges. If we pay under protest, I have answered this. Mr. Gupta says cannot charging GST on sale of long-term leasehold be covered under 11A? Mr. Gupta, very, very good question. I would imagine so. But let us see. This is a very, very big issue. And after this Telangana High Court judgment, they have gone into, or the taxpayers have gone to the Supreme Court. As of now, I don't see, because this is a big issue for the government also, 11A looks a little distant possibility. Mr. Bharat says whether valuation benefit for calculate corporate guarantee will be available to NBFC referring to ITC under 17.4. If you're talking about this proportionate reversal, Mr. Bharat, then I don't understand. You have to be a little more, clarity. Okay, you have said again whether valuation benefit for corporate guarantee from domestic holding company will be available for NBFC. See, valuation will be benefit for corporate guarantee would be available. But this ITC reversal, you are saying, of course, it would be applicable. Both are, separate. Okay, you are saying 100% ITC is available. Yes, in my view, yes, it should be available because ITC is available, although proportionate reversal is required. Very good question. I think it is available. However, let's see how this thing comes. Mr. Rajesh says, is there any notification for no customs duty and no IGST for export of machinery under 8422 which are imported? Export without doing anything to the machinery. Now, this is a very specific question. I have to go to the circular or notification of customs for this. Mr. Tarun says 74 has common time barring period, but the difference in ITC, difference in 74 and 73 itself. Let 74A come, I think, to the extent of time barring period, they will make it common. Penalty, interest, everything would be as it is. That is what we understand from the government as of now. Department asking SCN under 74 without valid reason. Very good question. Now, this 74, you have to contest on 74. If 74 is dropped and 73 is applicable, then the question is whether this amnesty is applicable or not. In my view, the government should cover this case. Let us see how 128A comes. Department issuing SCN 74. Again, as I said, you have to contest 74. Should we litigate all demands even if it is acceptable so that we can avail the benefit of interest or penalty once benefit of amnesty scheme comes? Yes, in my view, you must file an appeal even if you want to admit and take the benefit of amnesty. Mr. Sanmitra says the circular says that penalty would be applicable in case of unregistered RCM. However, if we deposit the RCM and avail RTC voluntary, then also whether penalty is allowable. Circular says so, but in my view, 122, why would it be applicable? When I am raising the self-invoice suo motu, I don't see 122 being applicable. However, it may have to be contested. Mr. Nayak says if credit note declaration format can be circulated, we will. Give us a few days. We will do it through VILGST. Thank you very much. I think I have answered all the queries on the chat box. Thank you very much, participants, for joining this webinar. Thank you, VILGST, Samir, and thank you, Team Tax Connect. Thank you till we meet again going forward. Thank you very much. Over to you, Samir and Pratyay.
Thank you, Vivek. Taken up all the questions and clarified almost all the doubts. Yes, till we have the notifications issued by the department, we will have to wait for the further more clarification, and we will again convene this session once we have the notification out by the department. So till then, goodbye and take care.
Sure. Thanks.
Thank you, Vivek sir, for this wonderful deliberation. Thank you, Samir sir from VILGST for coordinating with us. Thank you all the participants for attending the webinar. We conduct such webinars every month and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you all once again.